What is the intrinsic value of the Home Depot? In today's video, we're going to take the Home Depot business and try to calculate their value in order to see if it's the right time to put this stock into our portfolio. Quick and simple, we are going to take a look at the latest earnings report, see if HD outperformed analysts' expectations, look at the financial performance over the past decade and use these valuation models to answer the biggest question of this video. Home Depot is currently trading at $355.80, being up 2.67% year to date and up 18.32% from a year ago. The world's largest home improvement retailer reported sales of $36.4 billion for the first quarter of fiscal 2024, a decrease of 2.3% from the first quarter of fiscal 2023 and below the $36.65 billion analysts expected. Comparable sales for the first quarter of fiscal 2024 decreased 2.8% and comparable sales in the US decreased 3.2%. However, the home improvement retailer did beat income estimates, recording $3.6 billion in profits or $3.63 per share compared to the $3.55 billion and $3.58 per share analysts expected. Knowing this about the latest earnings report, let's check out the key financials I tend to look at when deciding on whether a stock is feasible to put on my watch list. Starting off with the dividends. We can see a nice and rapid growth, going from $1.88 in 2014 to $8.36 in 2023. This means having a 10-year dividend CAGR of 13.48% and a 5-year CAGR of 15.20%. In order to make sure this growth is sustainable, we need to look at the free cash flow per share and see if this keeps up with this growth. Because remember, dividends are paid out of free cash flow. We can see this going from $4.41 in 2014 to $11.22 in 2023, having its peak in 2021 and then slowly going down. The 10-year free cash flow CAGR is 8.23% and the 5-year CAGR is 5.46%. This is lower than the growth in dividends, which could potentially bring future dividend raises in danger. In just a second, we're diving deeper into this. Despite this, would you have bought Home Depot 10 years ago? Your yield on cost would be over 10%. Home Depot uses a portion of its cash flow to buy back shares. In 2014, the shares outstanding was 1.43 billion and in 2023, this went all the way down to 1 billion shares. The strong growth in the business is supported by both earnings and revenue per share. Now we've gone over everything, let's answer the biggest question. What is the intrinsic value of Home Depot? To answer this, we're going to make use of these valuation models. Please do me a favor and hit that like and subscribe button. I'm going for 136,000 subscribers by the end of the year.
You serious?
Let's start off with the discounted cash flow model, which values a company based on the amount of free cash flow it's going to create in the future. And we're going to use this model in two steps. By plugging in the historical free cash flow and using a growth rate of 10%, which is based on historical data and analysts' expectations, at a discount rate of 8%, we can calculate the present value of the future free cash flows. By adding the cash and cash equivalents and subtracting the total debt, we come to a price per share of $345.20. Not only do I want to know about the future of the cash flows, I want to know if the dividends are sustainable. We need to put the dividends per share next to the free cash flow per share and see how these two relate. We can see a nice and steady climb of dividends, but for the free cash flow, it's a bit different. Although the growth between 2014 and 2021 looks amazing, it's downhill from there until now. This could bring potential dividend increases in danger, as we can see that the free cash flow payout ratio is at its highest point, 75%. Also, because a larger portion of the cash flow is used for dividend payouts, this means that a smaller size of money can be used for growing the business. The third model is the dividend discount model. This values a company based on its future dividend payments. We plug in the historical dividend payouts, giving us an average growth rate of over 10%, using a discount rate of 8% and a growth rate of 5.5%, which is much lower than the current growth rate. But looking at the growth in the free cash flow payout ratio, I like to be on the conservative side of things. We can calculate the stock price because of this, giving us a price per share of $379.80. The next valuation model is the multiples valuation model, which assumes that similar companies should be valued the same. Companies that are similar are Leslie's, Floor & Decor, and Lowe's companies. Using the price to earnings ratio of these companies and the earnings per share forward looking of Home Depot, we come to an intrinsic value of exactly $367. I don't just want to evaluate Home Depot using other companies, but also compare the business to its own history. So let's take it a step further. I want to know how the price to earnings ratio has been doing over the past decade. The thought behind this ratio is that the lower it is, the cheaper the company. We can see this being steady for the past decade, between 15 and 25, which is lower than some of its peers. After using these valuation models, we come to a stock price of exactly $364. This is above the current market price, but using a margin of safety of 10% as suggested by Benjamin Graham, the mentor of Warren Buffett, the acceptable buy price drops below that. Analysts expect Home Depot to be around the value we just calculated. I myself agreed to this valuation. The insane growth in dividends year over year might slow down a bit, as the more cash flow is needed for dividends, the less it can spend on expanding the business, which in turn might slow down future free cash flows. At the moment, I do not plan on buying Home Depot anytime soon. I choose to go for other stocks, having both strong indicators in growing the business, its dividends, and being very future oriented, like Microsoft, which I recently valued. If you want to check out that video, click right here on screen. If you made it this far into the video, please consider subscribing to the channel. Thank you so much for watching, and if you have any suggestions on what stock I should value next, let me know in the comments down below.